Welcome back. You're watching Market Pulse, and let's put the spotlight on value picks from brokerages. And today we are talking about KEC International. Now the stock is up nearly 47% this year. Remember, Prabhudas Leeladhar had pegged it as one of its top value picks when we did our series on value picks. And they have a buy rating on the stock on the back of the healthy order flows. In fact, I think the stock has crossed their target price as well at 137. So that stock KEC has been on a roll. So what's working for the company? Well, joining us today is Vimal Kejriwal, Managing Director and CEO at KEC International. Mr. Kejriwal, thanks so much for joining us. The last time we spoke with you was when you were looking at the sale of the tower assets, where the CCI had cleared your proposal to sell about 381 towers. Where does that stand? And give us a sense of what FY16 is looking like right now.
I think FY16 we are fairly confident. And we have generally been saying that we should have a growth of around 10 to 15% over our last year's revenues of almost 8,500 crores. So hopefully we should be somewhere between, close to 9,500 crores of revenue in FY16.
Okay, does this include your tower asset sale as well when you're talking about these numbers for FY16?
No, what I told you is the figure for the revenues of the normal business. We are not accounted for any tower sale in that. That's hardly around 80 crores or so. So that's not figured into, or configured into our revenues. That's a capital asset sale.
Okay. Tell us about the order book, because in the beginning of the year you had said that you expect a 15% growth in order book in FY16. We are at halfway mark this year. Would you stick with that projection, or at least we've crossed one quarter? How is the visibility looking like?
Our order book, if you look at it today, is roughly around 10,600 or 700 odd crores. We have had an inflow of close to 6,000 crores from January onwards. So order inflow has been pretty good for us for this year. Okay.
Mr. Kejriwal, one of the reasons that you were looking at the tower asset sale is to really get your debt in order. What is your debt position right now, and what's the trajectory for the exit from non-core assets?
Our debt is approximately around 2,200 or so. Most of it is working capital. I think 600 or 700 crores is what we call term debt, of which a part of it will get paid once we sell our towers.
So how much of the revenue from sale of your non-core assets will go into debt reduction, or is it completely only for that right now?
I don't have the exact number, but it should be around 40 to 50 crores. But the rest of the proceeds will also go towards reducing my working capital debt. So effectively the entire 80 crores would go in, reducing my debt.
I'm going to ask you about the overall picture. Do you have any contracts, any impact of what's happening in Europe to you? Any contracts, any exposure to Europe, anything that you get out of there in terms of revenue?
Europe to me should be actually a positive impact, because we don't export to Europe, but rather we import equipment from Europe. So some of my contracts where we buy insulators and hardware from Europe, we should see a positive inflow. We hardly have, I don't recollect having any contract today which is in euro currency. So I don't think euro should have anything on the negative. On the contrary, as I said, it should be positive for us.
Okay. Finally, a quick question on your order book. This month, it seems that you have got a couple of orders, especially from the railways. How do you see it kind of flowing through into the system and onto your balance sheet? It wasn't, there were a couple of other orders apart from railways, of course.
Our growth is likely to be more in the T&D, which is, which accounts for almost 80 to 85% of our revenue. So we are very clearly seeing traction in that. We are also seeing traction a little bit in cables. Cables last year we had a very good year. I'm not sure how much we will see, because the order there are 3 months orders. So right now we have a decent order book, but if we continue the trend, it should be okay. The other thing which I would like to talk about is railways. Railways, we have a very large order book as compared to last year. So hopefully the railway order book, once we start executing, part of it may come this year, but maybe the maximum impact on the railways would come in FY17.
Right, Ms. Kejriwal, we leave it there. Thanks so much for joining us today. Well, we head into a short break on that note and come back with a lot of the brokerage calls on stocks. Today there is a call on Yes Bank after yesterday's big negative call on Yes Bank from today we have a positive call on Yes Bank, and that's why the stock is doing well. We'll come back and talk about all of that, including what analysts are expecting from the technology biggies, Infosys and TCS.